Good morning, everybody. Welcome to the Flow Show, the day after the night before, and plenty of volatile moves, though not the worst case outcomes that we were potentially preparing for. Plenty of moves nonetheless. Hope you're doing well. Hope you're surviving today, and came out of yesterday unscathed, and hopefully with some profit in the bank as well. We'll get into all the Trump stuff a little later in the show. We'll go through some of the other news before then. So let's crack on with that. Let's give that for starters. PBOC, they took their fix down to the 717s for the first time in ages. Maybe just a bit of a mechanical move based on what happened in the one overnight. That coming down a good chunk as well amidst all the Trump stuff. So again, it's probably a bit mechanical rather than anything else, like they're trying to drag the rate lower. But that's the way it's gone. Anyway, we'll see whether it stays there or not. Over in Japan, and we're getting, as you can imagine, a fair bit of reaction to Trump's speech yesterday. Japan's top diplomat to the US to lay out Tokyo's red lines to Trump's administration. Economy Minister Muto says that they will examine the impact of US tariffs on Japanese companies. Now, if that is a view shared also by the Bank of Japan, that could mean that they stay their hand in terms of a hike this week. We'll have to wait and see. We won't know. But you never know with those guys. They tend to be a bit more cautious than not. So it's possible that may feature into their thinking as well. Nomura, they don't see any change from Trump. They say that the BOJ is still likely to raise rates after the inauguration. On the jobs front in Japan, Nissan has been planning some cuts, but now it's being reported by the Nikkei that they'll only go through with around 70% of those cuts in their production lines. Sorry, I'm just keeping an eye on the news because there's a Trump headline popping up already that he is looking at potentially selling some federal government office stock. See what that one comes to. Anyway, back to Japan. Yes, and Nissan, they had some job cuts on the line now, looking at only 70% of those job cuts going through. So a bit better news, shall we say, although job cuts are still expected. Over in the UK, we've had some data out. Jobs data, not that we can trust it these days still, because they're still faffing around trying to make the report make sense. Either way, we can only deal with the numbers that they give to us. Claimant count was a little lower than expected. Unemployment rate went up though to 4.4% from 4.3%. What we also got was a hefty pickup in wage costs as well. Earnings ex bonus 5.6, including bonus 5.6, well up from the 5.2s prior. So once again, the Bank of England between that rock and a hard place. Do they cut rates on the higher unemployment rate, or do they stay on hold on the inflationary pressure brought about by these still sticky wages? Okay, reminder, their mandate is inflation. Not that they don't obviously look at the economy and unemployment and whatnot, but their mandate is inflation, and so it puts them, keeps them in that sticky spot they've been in for so long. Bank of England Wood has been speaking on the political side of the fence, and we would like to explore with the government whether there are wider regulatory changes which could help support UK growth. This is something that the Prime Minister and Chancellor have said they're going to look at. Regulation, see if they can loosen regulations, financial regulations, just to help, as I say, support growth, get a bit more growth coming. They're on a bit of a charm offensive at the moment, or trying to get on a bit of charm offensive. Reeves was having meetings with some US firms yesterday, I think, or had organised some meetings with some US firms yesterday. She's going to be doing similar meetings with other global firms as well. She's due to host a speech or put together a speech. I don't think there's a definitive date, but it could be towards the end of this month, where she's going to outline some growth measures. One of the things that's already supposedly in this speech is for airports, expanding airports. It's a whole contentious issue here in the UK. Adding extra runways to our airports here has been going on for decades. The usual fight between the climate lot and the noise lot, and the ability to actually grow some of the biggest airports in the world. But anyway, that's on the list apparently, to try and push through extending airports, building new runways. So that's the sort of growth measures she's potentially looking at. So some big hefty things. If she comes out with some good stuff that the market likes, then we could see the end of this negativity that we've seen in the quid and UK assets. So it could be a bit of a boon, but depends what she's going to do, how likely she can get it done, and what the market thinks of it. But that is something that's on the radar towards the end of the month. So keep an eye on that. We'll obviously keep you updated with any leaks and sources pieces and whatever that come out about that. Switching over to Europe, we've had German zoo out, the first numbers of the new year, and a little bit better on the current conditions. We're only down 90.4 instead of the 93.1 expected and prior. So current conditions slightly less crappy than they were in December, though still minus 90.4 doesn't exactly scream positivity. But on the other side, overall economic sentiment has weakened to 10.3 from 15.2. So things are looking a bit worse on that side. Eurozone zoo as well comes out that improved over last month, was expected to drop a pip. It went up 1 whole point to 18. ECB's Wojcik says inflation risks are balanced. The data is broadly in line with ECB forecasts, but says the stagflation risk is clearly here. At least someone's taking note of it. Says he doesn't feel uncomfortable with the current market pricing of rate cuts. Bit of a line from Kestrel Casimir, one of the hawks at the ECB, says he sees 3 to 4 more cuts starting next week. So heavily in the dovish camp over there. Now, it could be a case that we're seeing some of these ECB members talk in their own book in terms of their own country and their performance. For example, you might expect the Germans to be pushing for further rate cuts over the likes of Spain, whose economies are doing much better. But it's every meeting we get to, it's becoming a little bit more fragmented in terms of the noises we're getting from these pods and what they want from policy. ECB's Vilroy says if the pace of cuts is steady, we don't need to make them bigger. Says it's a plausible consensus that the ECB will act at each meeting. And a slightly different line from him now. He says victory against inflation is on track. Some prior comments had him already claiming victory on inflation. So he dialed that back a little bit, probably based on the fact that inflation has nudged higher over the last couple of months. But anyway, still got victory in his speech. Coming over to Canada, because there wasn't any data out yesterday. I've not even got yesterday up. Naughty, naughty. We had the Bank of Canada Business Outlook survey there. Of course, hasn't got the numbers on this calendar. Don't even know why I bothered. Anyway, I've got the numbers. So the current situation, or the overall business outlook, as they call it, came in at minus 1.2 from a prior minus 2.3. So that was, again, a number that's less rubbish than it was before. And this is a quarterly report, okay? So this is for Q4. However, on the future sales number for Q4, that rose to 31.0 from a prior 13. So a big jump in expected sales, which is good news for Canada, of course. Not that they only moved much on any data yesterday, right in the middle of Trump and whatnot, but that will feed into the Bank of Canada, the next meeting coming up. We do today have CPI data in Canada. It's about the only data we've got today on that side of the pond. CPI year on year expected to fall a pip to 1.8%, and a little bit softer in some of their core measures as well. Trimmed, mean and common, all looking to come down a little bit as well. Keep an eye on the BOC core here at 1.6. So inflation still on around target. The BOC run a 1 to 3% range for their wider inflation measures. Obviously 2% is the midpoint for that, and that's where they'd like to have it sitting. So we're there or thereabouts. They will be worried about softer inflation. So this is a potential situation where if inflation is coming markedly under target, that could potentially speed up rate cuts. But there will also be some worries that they've gone quite hard and quite fast already without seeing the effects of those prior rate cuts coming through. So we'll have to wait and see what they do. But for now, take these numbers of what it means. Softer numbers, more chance of a cut. Hotter numbers, less chance of a cut for now. Right, Mr. Trump. Mr. Trump. So we went into the inauguration with headlines that he wasn't going to go or announce any big tariffs or any tariffs on day one. That got the market easing up on the tariff threat trades, i.e. the dollar coming right off, getting sold off and whatnot. Then it came to pass that he wasn't actually going to impose any new tariffs yet. The only real concrete tariff news that we've got is that he's going to look to slap 25% tariffs on Canada and Mexico, but this is over immigration, illegal immigration, and drugs and crime and that sort of stuff. Okay, and that's potentially coming the 1st of February. So that's really, as I say, the only real concrete numbers we've got. That doesn't mean nothing else is coming. Of course, they haven't even started on what they're going to do over trade. Trump has told his minions to go and look at all the trade deals, see what's happening with the USMCA, the China deal, and all those sort of things, and trade in general. So that's going to be a bit of a process before they get any outcomes of those findings, and then know how he's going to act on that. So the threat is still there in terms of trade tariffs. Okay, tariffs on immigration, drugs, all that sort of minor stuff, let's call it, is piecemeal. Okay, what's going to happen with trade is the big stuff, and that's still to come. But he declared his national emergencies on the border and on energy, which means everyone can get the drills out. Mark put a good little summary in our chat room in terms of what the energy side of the emergency stuff is. So if you're in our chat room, have a look at that, scroll back. He did remark on the EU and saying that he will address the deficit with the EU through tariffs or increased oil and gas purchases. Now, there's already increased at least gas purchases because of the switch away from Russia. So Europe has already been going to the US for increased purchases. Now, there's a bit of a double-edged sword for Trump. And I'm just going to put this out here early doors. If he wants the EU to address the imbalances of trade between them and the US via higher oil and gas purchases, and he also wants to end the Russia-Ukraine war, then he's sort of creating a bit of a rod for his own back, because if that gets resolved and Europe then gets full access to cheaper gas and fuel from Russia again, that will lower their need to buy from the US. which then creates the problem that they're not going to be buying more from the US. So he's in a situation now where he could resolve two situations but cause another one. I don't know how he's going to get around that situation, but it's just something to keep in the back of your mind moving forward, that doing one thing doesn't mean it's a positive for another thing. Anyway, speaking of Mr. Putin, he says he will meet him, but there's no date set, and that's also been confirmed from the other side too, that Russia will look to have a conversation with Trump, but there's no details as yet. He still intends to end the Ukraine war as quickly as possible, and he claims that Zelensky wants to make a deal, but we'll have to see what happens on the other side with that as well. So overall, we didn't get any big, massive tariff executive orders going through, but they're potentially still in the pipeline. We had some piecemeal stuff. We had a lot of domestic stuff. He's sending all federal workers back into the office. Work from home's out the window. He's put through another inflation measure, executive order to get the cost of living down and whatnot. So there's a lot of domestic stuff coming through that the market's going to be poring over and seeing what it's going to mean for the US economy. We're still very much early days in all this. The market just sort of reacting to headlines without really knowing the full picture yet as to what's going to happen. So we're going to be probably playing this game for a while longer. We do have to wait until the US markets open fully. Bond yields are back open on Globex and whatnot, so they're already being traded, and we've seen them down towards gapping down, coming down towards a 4.5% mark in 10s, and that's a big important number. So this move just looks like an easing of the tariff threat for now. Big bombs have been dropped in terms of that, but as I keep saying, we're not over that hump just yet. So we've had a little move down in yields, gap down, got to the 453s, but we've bounced back up again, and that's pretty much what's happening in a lot of markets as well. So the US Open today will be very important because it's the first real US market chance to trade what's come yesterday. So we'll see what happens there, see what happens with stocks and the like. But as for moving forward, we're all watching headlines again, and that's what life is going to be like for the next 4 years. But things will calm down a little bit over the weeks ahead once he's got all his plans out into the open. Mike, let's have a quick look on the executive order on Mexico and Canada because of the USMCA agreement rules. He needs a report. Yeah, so that's on the trade side. So he's looking at all this sort of stuff, and he's put a deadline of April for the USMCA. It's probably similar for the others, but again, we could get news sooner than that. But he's going to be looking at all those deals. But the initial tariffs that he's threatening at the moment, these 25%, are just on stopping illegal immigrants, drugs, cartels, crime, and that sort of thing traveling across the border, which also applies to China too, because obviously a lot of the fentanyl stuff has been coming from China as well, and that's what he wants to stamp on. But the trade stuff, yeah, it's going to be a more longer drawn out affair. And if it's April, by the time they complete the report, we will no doubt have plenty of sources pieces in the meantime before then, and plenty of denials or non-denials coming from Mr. Trump on Truth Social. So again, that's the market we're in at the moment. Right, let's have a look around at what's gone on. So there's really some clear moves that went exactly how they should have, shall we say, based on the way the news dropped yesterday. So we had this big move down in dollar CAD gaining on the potential no tariff threat day one stuff, and the market sold off the dollars across the board, but obviously Canada, Mexico being two of the main countries in the crosshairs straight off the bat. So we got that sell-off, dollar CAD, knocked all the way down to that 42.65 level, which is an old level going back to, see if I can get it up, going back to there. and it goes back a bit further. So that's 2020. That's why it's been set on my charts. That's where we stretch to. Then from that, everyone realised that he isn't exactly done. That wasn't the end of it, and that the trade stuff is still to come, and the tariff threat is still valid. So off we went the other way, cracking up through the highs, through 145, taking out all the stops before coming back under. So a nice round trip. We've been up and down both sides of the range, but now we're back in it. And so we move into what next mode from now. What you have to think about in this circumstance is that we have had a break up through some of the levels. We have cleared a bit of the whatever was sitting at the top side. Doesn't mean all those sellers up here are not coming back in. It's quite obvious they are, because now we're protecting the top of the range once again. Same with the downside. We've had a little extension out of this range down to another level, pinged it, and back up we've gone. So if we get a quick move now outside of the range, one side or the other, that might be the move that has legs. But we've got to look at the reason for it. If we're coming on the back of more Trump headlines, that's one thing. Maybe the Canada CPI data is going to show us something else. And if it's quite weak, indicating the BOC might have to speed up cuts again, then that will be a move that might have more legs. Okay, so another break now of these ranges, edges, might be the one that have a bit more follow through. But otherwise, we've had a nice little run around, and now we're just, back in the box, as we like to say. Dollar MEX, very much a similar picture. Very similar to dollar CAD in that we've had these highs, had this range, we've had these little pokes above, even making a fresh high yesterday by a few pips, but we haven't managed to hold a break. Still can't hold a break over 2080s for any length of time, and that's the more significant price action to me than anything else. We've had the dips, we've had the bounces, we're still in the range. Again, look at context for some of these moves. This has been a very strong trend, and this was going on from last year. So a very strong trend. It's not for breaking just yet. There's still the threat of tariffs. I think if we do see a break of 2080, potentially that's the one that's going to have some legs. I'll be looking at this 50% line here. Up here, where is it? It's just around the 2103. Okay, big old level. But the fact that we've been running up short of it, pretty close to it for a long time, I wouldn't have as much faith. I wouldn't put as much faith into that level holding if we get a proper move through 2080, high 2070s. Okay, if we do, then we're probably going to be busting higher, and then we could be, 2150, 22s not long after that. To turn around this trend, we need to get below 2009, which is sort of caught the bottom of the range here. Prior level on the way up, 2009s up to 18s, bit of a zone, quite wide, but this one likes to move pretty bigly, so you've got to factor that in. Really, unless we're below 20, the psychological 20, and holding below that, this trend doesn't look like it's going to be turning. We're miles away from the 38.2 of this move. That's down in the low 19s. So even if we do get a move south from here, it's going to look like a bit of a minor pullback, unless we're starting to hold under some of these support areas, holding under 20s, 1990s, that sort of thing. If you start to see, resistance coming in against the 20, then maybe we are seeing a bit of a turn in the market. But on paper, sitting here right now, gun to my head, I think there's more chance of seeing a break up through these levels than a dip all the way down. But that might be down to the headlines, and we don't know what may happen in the next few days. But I don't think Mr. Trump is going to go easy on anyone just yet. It has broken the resistance. Just going back to dollar CAD, yes, it has broken it, but it couldn't hold the break, and that's the important price action for me. It's fine breaking, yeah, go up go through 145, go up to near 145.20. But look how long it lasted. And then we came back over 100 pips pretty quickly. Okay, 120 pips very, very quickly. Okay, so it has broken, but it couldn't stay broken. And that's the key point for me, mate, because it means we're not quite ready to go shooting higher on that. It's going to take more news, stronger news, to get us moving that way. As for anything else, let's look at the euro, which relatively quiet in the end. Similar theme. We had the no tariff day one threat being removed, so we saw the dollar getting sold off. We got up to these prior highs, couldn't even get up to the 104.50. Okay, just about got up to the 104.35, 36, whatever. Couldn't really put a bigger test in on that 104.50, which is at the moment one of my key topside levels, because it had all this action on the way down, and then it was resistance on the way back up. So that's my key level, but we pulled up short. So here we are seeing it bleed lower. Nothing has changed in this part of the trend. Nothing has changed in this part of the trend. Okay, so we're still in a downtrend and it's still valid. And unless we're getting up above that level and the fib there, then there's every chance we head down. What I think we're going to see probably is maybe a bit of consolidation, or a bit more consolidation. We've just started to seeing it building here. You know, we were struggling to get down. We had the little extension, then we got back up. Now we're finding decent support down here. So I wouldn't rule out a bit of sideways action here, pinging between the levels. And then it's all going to come back to what the Fed's going to do, what the ECB is going to do. But of course, we still have the headline risk hanging over us as well. Cable 2, that did manage to at least stick its nose properly above 123 yesterday. As usual, cable a bit more volatile than the euro. What did we do? We slammed into the next level up near 123.5. Back down we go again. Now we're back down under that level, under 123s. Back in the box we go. Again, no real indications that we're breaking this trend or the bigger trend at all. So it still remains very weak. But again, maybe we see a bit more sideways action. Maybe we see a bit more of a dip buy mode than the rally sell mode, depending on what levels we get to. And again, if this Reeve stuff starts playing through and it looks like she's trying to do something that the market likes, that investors like, away from this keep raising taxes and hitting firms and whatever, if it's something more growth friendly, that could mark a pretty significant bottom for the quid. Not that we're seeing it in euro sterling, because that's still pretty much glued up towards the highs. So none of that positivity is yet feeding through. So what you're seeing in cable is not the pound moving, it's the dollar moving. Okay, you want to see what the pound's doing, euro sterling's telling you that it's not doing an awful lot. You know, 20 pip range through yesterday with all that news and tariff news. Again, this just highlights what I've been saying. If you want to look to trade stuff that isn't totally affected by Trump, the US and whatever, then you need to look at your crosses, okay, because they're far more stable, far more or less impacted on what Trump does, unless there's some speed moves going on in the related dollar pairs. Aussie Kiwi, same sort of thing, not doing an awful lot, 20, 30 pip ranges. Okay, the Aussie dollar's moving around, the Kiwi dollar's moving around, but the Aussie Kiwi is staying pretty steady, so less volatility for you there. Aussie dollar, look where we got to. Oh, still got me scribbles from yesterday. Right up to the zone. How long have I been telling you about this zone up here? That's where we need to get through. We've had another test and we couldn't get through. So the brick wall stays in play. The trend stays in play. Can't rule out, moves to the downside. Again, might be a situation where we're over the worst of the threats, or we've seen as much news as the market's going to get. Yes, tariffs may still come, but we did a lot of tariff pricing in this move coming into Trump. But you know the key levels, 61.70 and these lows here, 61.30s. If we're breaking through there, there's the potential for the trend to continue. Unless we're breaking above here, you ain't going to be getting 63, 64s or anything else better. Okay, so you've got defined levels, defined lines in a lot of these pairs. Okay, they're giving you your trades. If you wanted to be, if you're bearish on the Aussie dollar, this is where you wanted to give it a go. Okay, if you want to be bullish, you know you want to give it a go into these levels, but you don't need to be wrong by far. Price action will tell you. If we're breaking up here, holding it as support, you know we're potentially going to be stepping up from here, building support here, then we might get a move up 63, 64s or whatever. Flip side, if we're busting down and holding these as resistance, then you know you don't want to be long. If you are long, you don't want to be too long under that 61.30 level. Okay, so no bias is needed. Okay, you've got direction, you've got the levels. Kiwi, similar situation. Got up to the prior highs, couldn't get through. Okay, keeps everything, all the trends going. Nothing has changed thus far. Oil, that was another one that he obviously signed those executive orders to get. I'm kicking myself a bit because I had 80.50 pinged as my potential level where we might run into trouble when we pretty much nailed that within 10-20 pips. So again, there's nothing bullish from Trump on oil on the face of it. Yes, if he gets manufacturing moving in the US, gets demand up, which he could do if he makes oil energy cheap enough. That makes production prices cheaper for US firms. It makes them potentially more competitive in the international stage. It can get business moving, and then there's more demand for oil. That gets the price up. But that's all down the line. If he starts drilling now, that means a lot of production is going to be coming on before the demand is there to soak it up, which is going to bring prices down because that's what he wants to do. He wants to bring gasoline prices down, energy prices down. So before you can spark activity, you need sometimes that cheaper price. So that's got to come first. Get cheaper prices, gives US firms something to build on. But there's also the conundrum that we've been having a discussion in our room this morning as well, is where are the production levels for US oil firms? You know, it's all right saying taking oil down to $65 or whatever, making it cheap on the gasoline front, but it becomes less profitable for producers to get it out the ground, depending on where their break-even levels are. Let's call it that, production levels, break-even levels, cost levels. Okay, so it's not as straightforward as, yeah, we'll drill more, get the price down, everyone's happy. Well, if you're an oil producer, you're happy with prices at $80. You're not happy with prices at $70 because it's eating into your profit. But that's the conundrum Mr. Trump will have to deal with as it happens. But that's how, for now, just going ahead and drilling, wanting to make stuff cheaper is not good for oil prices. So don't be surprised if we continue to dribble lower, come down and down and down. And again, if he secures the end of the Ukraine-Russia conflict, meaning Russia can fully come back to markets and their energy resources can come back to markets, we're still in a weak demand environment. So that's going to be more production potentially coming in. That's not bullish for prices. Yeah, Mike, well, production might be at an all-time high. Doesn't mean it can't go higher. And again, that's something that Canada needs to be aware of. Because if he's going to be selling more of his stuff and bringing the prices down, it means Canadian oil prices are going to be coming down as well. And if tariffs are going on, it's going to make it difficult because the US takes plenty of Canadian oil, pretty much all of it, a good chunk of it anyway. So, and if there's going to be tariffs going on that, it's going to make it harder for Canada to ship into, or more expensive to ship into the US. So there's another problem for the CAD to deal with. I haven't really looked at what's gone on in some of the others. Gold still keeping its bid bias, but again, you know, nothing huge over the Trump stuff. So pretty much kicking back with a popcorn, watching what's going on. We have had another poke higher, just got up to this next area of former support, gave it a nudge, came back down again. So similar thing to the others, but again, this trend is looking like it's going, or still going, but it's making hard work of it. Okay, it's not in a rush to go all the way back to the 2800 area. It's just going a little bit slowly than we've seen in other times. So overall, we're still potentially in a bit of consolidation, bit of sideways action within a range, of course, between this high and this low. So still, are we going to go up there? Who knows? We may do, we may not do. But for now, it looks like the path of least resistance is at least higher from here. Stocks, S&P on the old futures front, we've rallied back, we've come back up, but even then, not really had much move. So that's why we need to see what the US wants to do with this. Okay, everyone else has been trading futures and whatever. In the meantime, not so much in the US side of things. So this is going to be important today. Is there going to be early indications that the market is liking all of Trump's policies? And what's that going to mean? Is it going to mean better for the economy and better for stocks? Or is it going to mean better for the economy, potentially high inflation, Fed on hold? Also, or Fed maybe tightening up a bit more, having to hike again, which, as usual, is not good for stocks. So a lot of questions to be asked here today. And I think what we're going to see in US markets later is probably going to lead everything else. So don't get too caught up in some of these moves. If the US decide they want to take things the other way, everyone else is going to follow. So we're not over anything. We've had Trump. We know some of his plans. We still need to know a lot of his other stuff. And the market's still reacting. So be nimble. Stay nimble. There's a lot of stuff that's still to come and still to happen. Do I believe the US 10-year yield will lead the dollar? Yes, I think so. As I've been saying on here for a while, yeah, keep an eye on yields. That is your good indication. But look for the divergences, okay? Because we're in a situation where some of this rally in yield is on the back of the Fed. Some of it is on the tariff threat and what that means for US finances and that sort of thing. So all that is in the mix still. You know, it's all good. Trump saying he wants this, that, and the other, and bring inflation down and do this and do that. But fiscally, what does it all mean? Does it mean he's going to be borrowing more? Does it mean he's going to slash costs more and take down borrowing? You know, Mr. Musk thinks that's what he's going to do. And then you've got the market's interpretation of whether they can do that or not. So that's going to be in the mix for yields as well. Okay, the fiscal side of things, what that's going to mean for US borrowing. What that's going to mean for US debt and its ability to service that debt. If it's all good growth, strong growth measures and the market likes it, then that lessens the risk that the Fed, that the Treasury won't be able to meet its obligations because it'll be getting higher income from taxes and whatnot. So that's all in the mix as well. So you might see some Trump news, if it's fiscal related, move in yields that might be counterintuitive to what it means for the Fed and that sort of thing. So, as I said yesterday, there's no clear paths in terms of what markets might move on. We might move on fiscal 1 minute, we might move on the Fed the next minute, we might move on tariff threats the minute after that. Okay, you have just got to identify what we're moving on. You can't just, if yields start shooting up, you can't just say, oh, that's the Fed, pick a reason out of the thin air and go with it. You need to understand why we're getting that moves, because then you know how to potentially react to it. Okay, doesn't matter if a headline from the Fed moves yields up, a headline of Trump fiscal stuff move yields up. It's the same direction, but it's two different reasons. Okay, and knowing those reasons are going to be very important moving forward, because that tells you what the dollar's going to do potentially against that yield move. It's not always yields go up, the dollar's going to follow. Okay, so defining that news, very, very important moving forward. Right, you guys and girls, got anything more you want me to have a look at? I think we've looked at a broad swathe of assets at the moment. What have we got coming up? We have got the Norges up tomorrow, so we'll have a quick look at dollar NOK. Again, not doing an awful lot, really. And I think a lot of central banks are probably, I don't know, there's no big tariff news out, so they're all like they've said in Japan, they've got to assess what's coming, what's not coming, what is coming. So they're all potentially going to be in a bit of wait and see mode. I don't think anything changes for the Norges yesterday. They still reckon they're going to cut in March, or that's where they're circling the calendar. So I see no change there. But again, this is another one that's been going sideways coming into Trump. It's not breaking out anywhere. So I don't expect anything to come from the Norges tomorrow. Maybe we get some idea of what they think of Trump so far. Probably a wait and see game. But we'll have to wait and see whether their view of the next rate cut has changed at all. Maybe now that we're over a bit of the Trump hump, they want to cut a bit earlier. We shall see. Oh, I'll tell you what we haven't looked at, dollar yen. Because obviously the Bank of Japan's coming up as well. If they were going to hike on the fact that nothing big came from Trump, then they got that. So they should be clear to hike. But as we know from the Bank of Japan, as I mentioned earlier, they are a cautious bunch. And if they don't feel they know enough about what's coming from Trump, does that keep them sitting on their hands for another month at least? They're never in a rush to do anything. Okay. In theory, based on what they've been saying thus far, we should be getting a hike. But again, we don't know how big that hike's going to be. Price action wise, we had a little nudge under the 155 level. Again, couldn't hold it, couldn't maintain it. Back above already, finding support there immediately after bang into that level. So I still feel this one, if we get a move lower on the Bank of Japan, if they do hike, all else being equal, I can probably see that dip getting bought quite significantly. And unless they've gone really hawkish and indicating there's going to be follow-up cuts over the next few months. If it's just another one and done, sit back and wait, then we're probably going to trade out that hike pretty quickly. Whether it's got enough in it to get back up 157s or higher, that's another question. But after the BOJ, depending on what they say, we're going to flip right back again to the dollar side of things and what's going on there. But that's what I'm potentially looking at. I don't know if I'm going to get up for it on Friday. We'll have to wait and see where the rest of the week develops. Nuno, what could move the pound? 10-year yields below 470. Let's have a look at UK 10s. Well, a lot of the movement has been, or a lot of the focus has been in the 30-year yields, just because that's the one that's moved bigger. We've also had quite a significant drop in yields, okay, which is probably a bit bigger than what it drove the pound lower when we had this move up. Because even though we've had this big pullback in yields, the pound isn't up trading at 124 or anything like that. So holding below 470, yeah, there might be a bit of pressure off yields at the moment. We might be over the worst. As I was saying, when we got up to these sort of levels, we're not pushing on. The same with US yields, we weren't pushing on. Let's have a quick look at those 30s. So they've obviously come off the highs. We're sitting above 5%, 5.25%. It's still pretty high for these. But that's always going to be reflective of the UK. We always got higher inflation pressures than a lot of others, just because of the nature of our imported inflation. Are we going to be heading all the way back down to 4%? It's going to take a big, big turn, I think, for that. Until we know what the Chancellor's going to do to try and fix the mesh, this hole that she's dug herself in. If she digs herself out of that, then yeah, we've seen a top, and we're probably going to ease back under 5%, and that will be positive for the pound because it's been negative for the pound thus far. That's the way it's going to work. It's a bit different to the US, where yields go up, the currency tends to follow. And again, but that shows you the divergence between what we're trading on here. We're not trading on the BOE being hawkish and having to potentially move to hikes or stop cuts like we are in the US. It's a different story. This is investor fear, investors wanting a premium to lend the UK money because it doesn't believe the Chancellor and the economics from the new government. So that's what I mean when I was explaining about the US stuff. What is driving yields? Because that determines how the currency moves. So in this case, yields coming down likely means the pound going up. There's a bit of a reversal to what we've seen previously. So I hope that's explained that. Right, unless you guys and girls got anything else, I'm going to give my voice a rest. You probably had enough of me for talking for 45 minutes. Have a great day, everybody. Keep an eye on that Canadian data if you're trading the loonie and all those levels that's going on. And obviously do join us on Face later, where you get to hear what the Yanks think of Mr. Trump so far. And no doubt they'll be shooting guns in the air and yee-hawing and all that crap. Anyway, have a great day, everybody, and we'll catch you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.